In 2021, as the pandemic continued to push buying and banking online and the price of both Bitcoin and tech stocks climbed, venture capitalists poured money into Fintech, a total of $133 billion globally, almost 3 times the $49 billion they invested the year before. That flood of capital supercharged a new wave of Fintech startups, so many that half of this year's Forbes Fintech 50 list are newcomers. Their focus areas cover a number of financial needs, including cryptocurrency, making banking experiences easier, and sending money between countries more efficiently. Here are some of the 25 newcomers to this year's list. Column is a San Francisco-based, tech-focused, federally chartered bank that aims to replace the patchwork of financial services providers that fintech digital banks need to partner with. Services include holding customer deposits, processing bank-to-bank transfers, and running wire transfers. This was all built around the nucleus of a one-branch national bank in Chico, California, which the founders bought last year for $50 million. In Toronto, ClearCo funds e-commerce startups with revenue-sharing agreements plus a 6 to 12% fee. The investments can range from $10,000 to $20 million. So-called blind funding algorithms can help generate term sheets in 20 minutes, and clients also get help with tracking metrics such as revenue and ad campaign performance. Valued at $2 billion, the company says it funds 9 times more racially diverse founders and 25 times more women founders than the average venture capital portfolio. In Santa Monica, Grow Credit issues virtual credit cards to people with thin or no credit history who want to boost their credit scores. The card charges no interest and can be used to pay for recurring subscriptions like Netflix or Spotify. It links directly to the user's bank account for automatic on-time payments, which then help build a reliable credit history. At the end of 2020, Grow Credit had 8,000 customers. It now has 52,000. The company says it plans to launch a more conventional physical credit card with a 15 to 18% interest rate that users can graduate to. Finally, Melio helps small businesses pay bills and get paid online rather than through paper checks, specifically targeting tiny mom-and-pop shops whose owners often aren't accounting savvy. The company charges customers a 1% fee to expedite a same-day payment and 2.9% to pay by credit card. The New York company is valued at $4 billion and is now processing about $2 billion a month, up from $600 million a year ago.